Are you worried about losing money in retirement? You're not alone. Let's talk about what the safest investments really are and why the answer might surprise you. My name is Mike Heatwall, and I'm the founder and CEO of the Dala Group, a wealth management firm focused on helping retirees. Today's question is one we hear all the time, especially from folks nearing or already in retirement. What are the safest investments for retirement? It's a great question, but also a layered one, because the word safe can mean very different things depending on who you ask. For some, safe means avoiding market losses. For others, it means never running out of money or being able to spend confidently without second-guessing every purchase. So, when we talk about the safest investments, we're not just talking about asset classes. We're talking about building a strategy that helps you live well in retirement. Let's start with the basics. On the more conservative side of the retirement portfolio, we often use CDs, which are FDIC insured and predictable, money market funds, which are low risk and often a good place to hold short-term cash, U.S. Treasuries, which are some of the most secure debt instruments in the world, and corporate bonds, which are debt instruments issued by companies with strong financial ratings. Now, for some of our clients in higher tax brackets, we also consider municipal bonds, which can provide tax-advantaged income. But those are just the building blocks. The safest investment strategy isn't about keeping everything in conservative assets. It's about building a plan that gives you confidence to spend in good markets and bad. Think of it like two buckets. Bucket 1 is your cash-like investments for the next 3 to 5 years, which are safe and liquid. Bucket 2 are your stocks for the long haul built to grow over time. We do this by ensuring you always have 3 to 5 years of living expenses in conservative assets. When the market is doing well, we cover your withdrawals by selling some of the assets you have in the market. When markets are down, we use those safer dollars for income, giving your stocks time to recover. This allows your investments in the market to remain invested during downturns, so the assets have a chance to recover before we sell anything. Finally, once the market bounces back, we refill the conservative bucket. That's what makes the strategy sustainable and emotionally safe. So you're not constantly wondering, is it okay for me to go on that vacation or continue paying for my grandkids' sports activities? Is there a best investment? Here's the truth. There's no magical investment that's best. What we do believe in is this: a globally diversified portfolio that's aligned with your goals. For most retirees, that means some mix of conservative income-producing assets, growth assets like stocks to help outpace inflation over time, and a bucket approach that helps you avoid emotional decision-making. So yes, even in retirement, some level of stock exposure often makes sense. Not because we're trying to chase returns, but because retirement can last 20, 30, or even 40 years. That's a long time for your money to work or run out. So, what are the safest investments? It's not just about the product, it's about the plan. It's about protecting your principal from permanent loss, generating reliable monthly withdrawals, keeping up with inflation, and helping you feel confident about spending. If you found this video helpful, hit the like button and subscribe for more financial insights. Thanks for watching, and we'll see you next time. Once again, I'm Mike Heatwall, founder and CEO of the Dala Group. If you are interested in seeing how we help our clients, visit us at www.thedalagroup.com. Give us a call or schedule a time to connect with one of our wealth advisors. We would love to hear from you.